thank you everyone for joining us today here at Titan Cloud. So you all signed up to talk about the cost of status quo. What does that mean for fuel logistics and in there without using data science? So I'm going to hand it off to my co-host here, Adi, to introduce herself.
Hello, everyone. My name is Adi Raz. I'm the head of data science here at Titan. I have lots and lots of experience with data science, but I would say that I'm specifically a very operational data scientist. So my goal is really to get as much of these products into production as possible. And much of what you'll hear today is how we can really get data science not theoretically working, but actually working. Nick?
Yeah, that's awesome. Thanks, Adi. So Nick Viola, I've been on a couple webinars here, and I think some folks have joined before. So I'm the Director of Solutions Consulting, and I've been working in the fuel supply chain, automation, and technology business, really helping companies transform, which part of that is how do you operationalize data science and AI to actually see real-world results. So today, we're going to kick off starting with the state of the industry. I think this is extremely important to set a baseline of where we as operators are within North America and really the world. So I'm sure everybody's very familiar with some of these headwinds around shifting conditions, whether it's geopolitical, oil production, even miles per gallon improvement. I saw an interesting statistic that there are a lot more hybrids being sold today, like multiple percentages higher than just your traditional ICE or internal combustion engine. And so with improvements, even a shift maybe towards EV, some states in North America are impacted more than others, but as well as changes in consumer behavior. So return to office. Some companies are going there, others are not. We may not drive as far than we did 10, 20 years ago. So all of these, along with many others, are producing these headwinds and challenges for the fuel industry. So before we dive into like what does that mean, we're going to first talk about the growth rate that we've seen within the industry. So how much has the fuel industry grown, or the growth rate, year over year? So this is a total annual interest or annual growth rate between 1945 and 2000, and then between 2000 and 2019. So it's actually very interesting data that for 55 years we were at a little over 3% annual growth rate, and then for the next 20-ish years we were at 0.5%. And so what I'm going to do is I'm going to ask a poll question of, knowing this data, what does everybody here think that's joining our webinar that the annual growth rate in gasoline volume for the U.S. was between 2023 and 2024? So there's going to be a poll question that pops up. There's going to be a range, so I'm giving some leniency here. The answer, 0.25%. So even after COVID, even after the U.S. opened up and everybody started driving again, we have a lower growth rate in the most recent years, and we'll see what 2025 ends up as. So, with that being said, it's very interesting to see that yes, it has flattened out. That there was this massive growth, so 3% year over year. Actually is a pretty good growth rate where you can double every 10, 15 years in total volume. But we see that really starting around 2008, the financial crisis, there was a little flat, kind of went up before COVID, and then COVID, everything shut down, and we had a little bit of a spike back, but we weren't where we were. So what does this really mean for everybody? Gasoline is still going to be here. So there was some data taken around the globe and really trying to see what's going to be the fuel demand here in the next couple of years, seeing what the growth rate has done historically. And the good news is that gasoline is going to be around, even with all the headwinds. Again, whether it's within the U.S., external, inflation, higher miles per gallon, people are still going to need gasoline. So it's going to, however, at the same time, it's going to diminish. So as we see further into the future, 15 or 20 years, it's going to come down slightly. So as an industry, we're going to see that particular barrier hit where the volumes are not as high, where today a lot of the volumes are driving profitability.
And what's interesting about that, Nick, is, I mean, we can all see the downward trend, and we can all think about why it's happening, right? I mean, the why is one thing. I mean, we have more fuel efficient cars, more alternate sources of energy, but the why really here is not the good question. The question is, what do we do about it? And if it is going down, how do we strategically, use our tools to make the most out of the demand that is shrinking? So
yeah, that's a great thought.
That is really the important part that I read out of this graph.
I think you're exactly right there, Dean. You teed it up very well for the next part that I wanted to talk about, which is why if the today operators and within the fuel industry, we say the same, that shrinking demand is actually going to impact our bottom line. And so, thinking about this problem, gas stations are fixed assets, right? And there's even companies today, some of our customers are investing a lot into either building or acquiring new gas stations. And it's very similar to other industries in terms of the business model, right? So when you have a high fixed cost, you spend a lot of CapEx on that fixed cost. It's okay to operate completely inefficient. Like think about hotels or airlines. If there's always somebody packing into a hotel, it's okay to be overstaffed. It's okay to order more food than you need for your restaurants that are in the hotel. It's okay to have more room service because you have so much volume coming into this fixed asset. And it's very similar again to a plane. You can just fit everything in there. You're running the top line as high as you can, and you're not terribly worried about the bottom line. However, in this industry of fixed assets, when we just saw over the next 15 or so years, the volumes are going to decline. You need to have that different playbook. And so you asked the exact right question and way to frame it, Adi, around, so what do we do about this? Well, we really need to turn to a different playbook. When there aren't people lining up, when competition is getting higher, companies are acquiring either more stores, more C-stores, more gas stations, or even building their own. So now you're kind of even dispersing that demand over more fixed assets, as we have seen in the past couple of years. And so we really need that different playbook.
Absolutely.
So what does this look like? What does this start with? And it really starts with, how do you operate efficiently? So anywhere from your SG&A, your headcount, to your OpEx, to even your cost of goods sold. So how do you make sure that you have the right number of people doing the right jobs, that they are executing those jobs efficiently, that you are making sure that you're through either costs or your top line, or you're gaining more revenue, either through price or volume, that you operate more efficiently to impact that bottom line. Because once you do that, you're going to be able to outperform the competitors. And as we've seen in this industry, there are C-stores that are making their way from the north to the south, taking over the Midwest, being very dominant in specific regions. And so as you outperform those competitors through that efficiency, through better operation that impacts your bottom line, that outperformance of competitors is going to allow you to scale even more. You're going to become, if you're not rateable, you're going to become rateable in terms of buying fuel. You're going to have better buying power. You're going to have more control over those retail prices. You're going to be able to offer more goods, even inside the store, where a lot of our customers are focusing. You can acquire more. It's a large network effect.
And as you give the people, not just the right people in the right role, as you give them the right tools, you moving them from what they can do, but maybe not as efficiently as some of the tools we'll discuss, to higher level activities that improve overall performance of the company.
That's exactly right. And so leading into this, I broke this into 3 different areas in which you can impact your business. We'll focus on the first one in the middle just because it's not going to be a topic for today, but we have seen for our customers diversifying revenue streams. So more car washes, loyalty programs, investing in a vertical supply chain around their in-store CPG goods, right? So trying to figure out how do you actually diversify the revenue outside of the typical in-store and forecourt revenue streams. But to your point, Adi, at the very top, it's embracing technology. So how do you make people more efficient? How do you make your operators more efficient? Giving them either, whether it's hardware or software, to enable your company as an operational company, embracing that technology to impact that bottom line, which also includes the software side, such as data science and AI, which is the topic around today, embracing those new technologies, which also enable streamlining those operations. So it's one thing to embrace the technology. It's another thing, how do you actually utilize those in operation to streamline your costs, drive that revenue, and improve that bottom line?
And I mean, I've worked in many other industries prior to this one. And if you think about retail, and I don't mean gas stations retail, I mean retail. I mean, go back 10, 15 years and we all had brick and mortar stores, right? Mm-hmm. And eBay was the new big thing and no one really talked about Amazon. I mean, Amazon is not just selling products online, right? They build an entire digital infrastructure for logistics, customer relationship engagement. They personally recommend what you should buy next and what you would like and not. All of those advancements are exactly what would take someone from operating to operating efficiently. I mean, a point of sale system used to be a cash register.
Yep.
I used to work on one that wouldn't even tell me how much change to give back. That happened. It was real. Yep. And now, I mean, it handles payments, loyalty programs, inventory tracking. So again, there's a lot of ways in which we can take current operation and just bring them up to the next level.
That's right. So let's get into some of that around AI driven by data science, which I think we've teed up in the current environment is extremely necessary for you to grow as an operator.
Yeah, so I will try not to bore everyone to tears and give you really what I think is the most important part about data science in the fuel industry. So first of all, why do we need data science in the fuel industry? I think there's really 2 main reasons. One is that the problems that we're trying to solve are just getting more and more complex. It is just getting to the point where, and I will show it later, the problems are so big that if you don't handle them correctly, you're gonna continue to operate as you do today, just not efficiently. And then the second part is everything has solutions, and you can come up with a solution that is feasible, but that doesn't make it the best solution. And what Nick was saying 2 slides ago, you can operate, but unless you operate more efficiently, you might be leaving money on the table. So this very simplified version of a table here is what is used currently in almost every company that tries to do load and route optimization. It's called linear programming. And what it does is it takes all of the inputs and all of the outputs and tries to come up with the best route and load that you may have. Now, The reason I say it's simplified is because on this table, I'm only showing, hey, you have 2 trucks and 2 drops in the first line. And you think, hey, 2 trucks, 2 drops, that seems like 4 possibilities, right? They can only go certain ways. Yes, but there's a type of products, there's the capacity of the truck, there is the site availability. There's lots of things I'm not showing here. And what I am showing is that even when you have 2 drops and 2 trucks, you already have a matrix of a solution that's 53 by 50 big because of all the possibilities I just mentioned. Now, if you throw it into the current linear programming capabilities that most companies can build, it takes less than a minute and you get an answer. The problem is that once you go to, let's say, 5 trucks and 21 drops and everything that comes with it, your matrix grows to about 4,000 by 4,000 big. And linear programming will take about 40 minutes to run, but it will come back with no answer. It will simply fail and say there is no optimized answer. Once you get to a normal, what your companies deal with, let's say 28 drops, 9 trucks, your matrix of solutions is 11,000 by 11,000. Linear programming, which is the current status quo of how to solve this problem, is simply not going to cut it anymore if you want a good solution. So it's because of this type of complexity that we really need data science, and you need to try different techniques to solve the same kind of problem.
Yeah, so I think real quick with that, it's not just, that's one example of many within fuel, of which even though it's a linear addition, so I add in 1 increment of trucks or 1 increment of drops, it's an exponential increase in how do we calculate it.
Exactly. And we have another poll question. We'll see if the polling works this time. And we can publish it. And I'm just trying to gauge of what % of your day do you think you use some sort of AI or some sort of, advanced tech tool that really helps you in your day-to-day workload. And hopefully we'll get some answers. Nick, you can stop me as we get some answers to that question if the poll works.
Yep. Oh, we're getting some in right now. Nobody's above 10 to 15%. Most people in the 0 to 5, 5 to 10. Leaning heavily towards 0 to 5%. So somewhere between none and a little bit is where the majority of the poll is. And one respondent doing over 20%.
So good job on the 20%er. But I would say that that's very much what I expected. And I think everyone is being honest. I think a lot of us want more help. We want more tools that would help. It's just daunting to think of, oh my God, how long will it take me to learn a new tool, implement a new tool? Will it really help me? Will I end up doing a lot of work before and after to make it work for me? So I think this is a very honest response. On the screen, I put together 3 areas in which really AI is really perfect to help us as operators. The first one is forecasting fuel demand. Now, everyone on this call can very easily look at some, the past year, what will happen if a major weather event comes. They can figure out, hey, I know I'm going to need more fuel. But what AI is really good at is identifying nonlinear relationships, which we as humans are not good at. We can see, oh, this goes up, that will go up too. That's easy, and it's something that we comprehend. But when you have so many things happening at the same time and it's not linear, it's a very difficult thing, which AI is really good at for us. So forecasting is one of these things that AI can really help us with. I'm going to skip the middle one because we're going to talk about dispatch and optimization in a second. But fuel reconciliation is another one that AI is perfectly useful for. So we all know how hard it is to reconcile what you should have lifted versus what was delivered. And the problem is that these are small discrepancies, but they're cumulative. And over time, they can make or break a lot of money. So how do we deal with that? And that's where AI is really, really good, because it has superior anomaly detection. And AI can tell you, oh, this anomaly is normal. This one is not. And because it's a learning machine, it can even say, oh, I've seen this kind before. I know how to fix it. Here's some recommendations. And it can even fix some for you if you give it the independence. So AI is a very useful tool in reconciliation, as much as you give it the power to do so.
Yeah, and I think that is like just trying to tie everything that we talked about together around that flywheel that we talked about, is that you got to operate more efficiently, and then you'll outperform competitors, which allows you to grow your network. Thinking of, you either enter a new market or you expand your market. You may get new suppliers, or you may be operating out of a new terminal. You have these new locations. And again, these might be incremental changes. You're adding one addition to the complexity, but then it starts to get exponential in how do you make that decision. And I think about that in terms of people as well, is because a lot of our customers think, hey, I'm just gonna linearly scale my workforce. Well, it turns out complexity is exponential, it doesn't scale linearly. So now you really need a tool, because you can't throw people at it. You can't just say, I need to hire more. You're going to have to hire an exponential amount of more people to do the same amount of work.
Exactly. And I think that will become very evident in a few slides in a second. We talk about dispatching. Before we get into a specific tool demo that we've built, I always get the question when I talk about AI is, that sounds great, but how do I know it's not taking my job? And this screen that you see in front of you here, this computer screen, is someone that we actually met, that we talked to about our tools. This is their actual screen. So this is what they have on their screen when they try to make a decision of where they should buy fuel from. So they have to look at all the terminals, figure out the freight rates at those terminals. They need to figure out, once they're at the terminal, which contract to pull from, accessorial fees. They need to figure out where they are in allocations. And if they're within allocations today, are they within allocations on the week, the month, the annual? They need to figure out if they have any penalties coming their way. They have to figure out, oh, maybe I should have a spot buy. Maybe that's a better price overall, and I shouldn't even go to my contracts. This is one screen. And this is what AI should really replace. It is these kind of manual tasks that I think we all have done or are doing, that is really poised for AI to help. No one really wants to make a load, create a load, and be ready with it, and then 2 other orders come in, or a truck is broken down, or a driver on the first shift switched to the second shift, or there's traffic in downtown, or there's an accident, or there's a weather event, whatever it might be. We shouldn't have to continuously change loads, adjust loads, create routes, adjust routes, look at allocations. Instead, this is where AI is best. It can help us come up with the recommendations and let us do the actual decision making at the end. And so another poll question, does this sound like a lot of what you have to do? Do these manual processes reflect what you have to deal with on a daily or weekly basis? We'll wait for people to answer that.
Yeah. So waiting for some responses, either not at all. These processes somewhat sound like how you operate today, even if it's not with dispatching, but others. Neutral, extremely. You're getting some coming in somewhat. Okay. Neutral, extremely. Oh, here we go. Some more. So yeah. a little split between extremely and somewhat, and we got a neutral. So I think.
And interestingly, no one said not at all, which means that this is a pain point, at least to some degree.
Yep.
With everyone on the call. And And that is really what I try very hard for the products that our data science team builds, is to take the pain out. So AI is not here to replace any of us. I mean, I have to worry about the two, right? It can build models. You can go on Google today and say, build me a large language model that will predict my demand, and it will probably do a pretty decent job. But AI is here to help you come up with recommendations and suggestions, and it's your job to execute. So can it create a better forecast than what you have now? Probably, but it's up to you to execute on that. Can it help make loads and routes for FTL, LTL, split loads? Yes, and I'll show it to you in a minute. But it's up to you to adjust on time, on demand, as things change, and use those recommendations to what is best for your business. It can help you with buying decisions. It can help you track allocations and suggest where you might want to go to lift from. But all these decisions are, at the end, with you. The job of AI is simply to take out the insanely complex matrix that I showed earlier and try to help you come up with something that is digestible, something that we can actually make a decision, because it gets to a point where it's so complex, we simply cannot make any decisions except for just going with the status quo, which is exactly what we don't want to do.
Yes. And I've talked with, thousands of different operators at different levels, from dispatchers to chief operating officers. And, how I'm taking this, every person I've talked to knows their business. They know their market or their region. They know how they operate. And when they have this larger scale of a network, they do know the nuances. They're very good at understanding why things are happening. I'm trying to make this decision to have this outcome, but it does get to the point where, hey, you make one amazing decision based on the data, but you have 1,000 more to do for the day, and you cannot do that. And then you're trying to tie all of those decisions back together, whether it's, how do I dispatch my trucks? How do I make sure my carrier's on time? How do I know which load was lifted and dropped where? It just gets it gets to the overwhelming point. And AI, I think, to your point, Adi, is where this can help.
Exactly. So far we've talked a lot about hypotheticals and where AI can help, and we wanted to show you something that we've developed for this product, and it is really the load and route optimization that I kind of alluded to throughout this presentation. And we'll get to what it actually does, why it's so complex, and how it actually, hopefully, helps the dispatchers and operators of the business. So this is some of the decisions that a dispatcher or an operator needs to make today when they decide on loads and routes. How many trucks do I have to work with? What are their compartments? How big are they? How many orders do I have? What's the priority? How do I make sure I don't have retains left over? How do I minimize my empty miles? How do I control for driver overtime? How many of the drivers are in first shift, second shift? Where do I refuel? How long will it take me to refuel? How long will it take me to drop fuel if it is an LTL and it's a meter truck? How long will it take me to get to the site and out? So there's thousands, literally of thousands of decisions, which is exactly why this is perfect for data science and AI to solve. Now, when you solve the load and route optimization problem, that is the matrix I showed you earlier, the general concept is consistent regardless if you want to do FTL, full truckload, LTL, split loads. The important part is really identifying what you're trying to optimize. So obviously we all want to minimize logistics costs overall, right? Drivers, trucks, fuel. FTL, you want to minimize the empty miles. Our one very important client that kind of led this with us wanted to reduce driver overtime. That was a big problem for them. Many want to maximize the truck utilization. But the important part is you need to figure out what is your number one objective. The inputs are easy. You have the number of orders, you know how the volume, you know the products, you know the trucks you have available. Those are easy. The constraints are what makes this such a complex problem. So if we all had all the same trucks with all the same compartments of all the same sizes and all the drops were the same distance, everything will be easy. But it's because sites have different site availabilities. There's restrictions of the weight class that can go into certain areas. Truck flow rates are different for LTL, access to certain terminals, etc. It's these constraints that make the problem so difficult. And why it takes more than the general linear programming that I mentioned earlier to solve this. And in our case, we solved it with very complex mathematical algorithms and hundreds and thousands of simulations. So this is an actual kind of slides of a demo that we produced. So this is a real life case. The inputs for this particular, this is an LTL demo, by the way. So for this company, the most important thing for them is, hey, I want all my drivers to work less than 12 hours. And they must deliver all the orders that have the highest priority, which for them is a must go. So in one region, for one day, which was March 20th in this example, they had 71 orders, but out of those, 54 had to go out that day. 17 could go if we wanted to increase the truck utilization and there were a drop next to a must go. The optimizer that we built takes all of the constraints, the most important one being exactly this one, that it's under 12 hours and you have to deliver the 54, does all the simulations, and it comes back and it says, okay, you need 11 tank wagons to meet these criteria and to deliver the 54 within the 12 hours. Now, in the background, it does lots of things, but it also produces literal the loads and how to fill the truck. So every bar that you see here is a tank wagon. So there's 11 tank wagons, and it will tell you that for this tank wagon, it needs these two products. And if you go below, the chart below, it shows you literally by compartment which fuel goes in which compartment for that tank wagon. Now, this is small and it's probably hard to see, but these black ones here means that some of the compartments are not full. And you might ask, why would you ever send a truck out if it's not 100% full? And the reason will be clear in a second. So this is where all the products are, into which compartment. And when we go to the next slide, we show all the routes. So this is load number 1, and this is load number 2. All 11 trucks will go out for load number 1, and only some will have time to do another turn and go for load number 2. You can zoom in on the map. You can look at all their drops. You can see the order in which they're in. And again, this is a recommendation for the dispatcher. The dispatcher can look at this loads and this routes and say, ooh, I know this driver. I know, oh, another order came in and I know it will fit here. So I'm going to add this to this person's route. It's very important that we remember that the tool is not meant to take over. It's meant to give recommendations for what we think is the optimized solution in this case. Now, after you see the routes, it will provide you how many hours does each driver or tank wagon is out. So you will notice that many of these tank wagons only have one color. And that's because they're almost at 12 hours with trip number 1, load number 1. So this tank wagon, 143, for example, cannot go out again and do another route, another load, because it's already at 11 hours. Other tank wagons could do 2 loads. Now you might think, okay, that doesn't make sense. Why is this person or truck out for 11 hours? And remember, it went out with some of the compartments not to 100% capacity. And that's because this person, for example, the one I picked here, 143, is driving for 300 miles. So given that they have to be back within 12 hours and they're driving 300 miles, if you had the tank wagon to full capacity, you will simply come back with tanks. So the system, through its thousands of simulations, finds the best route such that whatever you decide to optimize is optimized. In this case, under 12 hours, the most you can deliver without coming back with a lot of retains. So that is how the solution puts it all together. And it's actually extremely complex, but the results are very simple for the dispatcher to use.
Yes. Yeah. So I think you hit it a little bit around we're trying to maximize the time. And this whole webinar is around operations and how do we reduce costs using AI. And if we sent a driver out with a truck that we couldn't fully either meet their time or we had more deliveries or more miles, then we're going to come back with higher costs. It's either higher working capital that's staying on that truck that we paid for, or it could be overtime hours. And so, and it's really hard to maximize that optimization, because you have to pick, okay, if I load this truck and these compartments with this fuel, what does it mean for all my other trucks in all the other compartments?
Exactly. And at the end of this optimizer, when it returns all the loads and how to fill each compartment, it also tells you what you should expect to do in the day and also what you did not achieve. So in our case, we started with 71 drops, 54 had to go that day, 17 could have been added to increase utilization wherever possible. We had 11 trucks. Now, out of the 71, 61 were fulfilled. So the most importantly, all 54 were done. And another 7 of the could goes were added onto trucks, leaving us with 10 that go into the overflow. Now, again, this is a recommendation. The dispatcher can look at those 10 and be like, I know this location. They usually don't take all of the fuel that they're asking for. It might fit on another truck. So they might know more than what the machine is not here to replace them. They know more than what AI is telling them. AI can only work based on what you tell it. So we know we'll be delivering about 55,000 gallons. Those 11 trucks will drive about 1,600 miles. And the solution set, again, can be accepted or modified by the dispatcher or the operator as they see fit.
Yeah, that's amazing.
So this is the load and route optimization tool we have built. And we are also in the process of, improving some other features that are insanely complex. My favorite one lately is Best Buy. When I think about Best Buy, it makes even load optimization seem easy. And it's not because of all of the fuel costs and the accessorial fees and the taxes that you all have to take into account. It is because of how they interact with the allocations. So in today's world, you might decide I have 50 deliveries, and given their locations, the best freight rates will be to go to Terminal A. And once I'm in Terminal A, or Terminal 1, I might decide to go with Supplier B because they have the best fuel costs for what I need. And look, I have 3 products and 2 are best with Supplier B in Terminal 1, but 1 might be a different terminal, but we don't want to go to 2 terminals, right? So the lowest overall load cost might be Terminal A or Supplier A in Terminal 1. And you might make your decision and say that is the best, lowest fuel cost, everything in, taxes, tolls, transport fees, driver costs, everything all in. But then you look at the allocations, and if someone else already made some decisions earlier in that day, all your allocations changed. So now supplier A might not be your best choice because of maybe you're really, really underlifting with supplier B, and you might have some penalties if you don't lift from supplier B contract, which means that your whole cost function will now change. So looking at Best Buy without data science, I don't know how you guys do it. Hats off to you today. But when you look at it with data science, you need to look at the allocations. Am I good today? Am I good this week? Am I good this month? And the trending over time and how it impacts the cost is immense. So that is our latest product enhancements that we are working on, Best Buy Intelligence. And hopefully next time we have this webinar, I can demo that one, because it's quite amazing what AI can do.
Awesome. All right, so let's move in. We're about 2 minutes away, but we have some extra time, I think, afterwards with some Q&A. So with those folks that are left, there's a little chat function that you can go in and on the right-hand side and type in any questions. So we have a couple already. It looks like, do you expect to see large-scale closures of old legacy gas stations that aren't fit for the fight? That's a great question. I would say it really depends. And a lot of that has to do with the CapEx that you're willing to spend, because either replacing a tank or making sure that you're monitoring it, that's a whole nother side of AI that we didn't even talk about, is like, how do you know that your equipment is good, especially if you're acquiring it in its old legacy? So you may be at higher risk. I would say I don't know if I have a definitive answer on old legacy gas stations. I think it goes to the fact of, can you operate them efficiently while at the same time minimizing that risk? And I think the term old really hits it home there.
I think the second question is a really good one. How would AI know to adjust for something like a collapse of a bridge or an increase in tolls? So AI is only as good as all the information that's out there. If others like you, for example, if you're on traffic, right, and I'm doing the load and route optimization, and then all of a sudden, all of my routes are going around this bridge, it will be extremely obvious. So when you do the load and route optimization, you have traffic in there, and it will be extremely clear that all of a sudden that road is not an option. Now, as far as increase in tolls, it depends on what data sources you're using. The more inputs that you have into a model, like toll expenses and such, the better it will be. So AI will not specifically know of an increase in tolls unless you have a specific tool looking for changes in tolls. And you'll actually be surprised. I once built a sentiment analysis model on Twitter to figure out where people will shoplift from, believe it or not. And people are very, very vocal on social media about shoplifting. They actually give each other tips on how to shoplift, believe it or not. So I use that sentiment to know where people would go. And similarly with tolls, when tolls go up, people talk about it. So as long as you have a tool set there to listen to chatter, AI will pick up on it. So it's all about being ready to accept whatever the world is out there to give you. But you're 100% right. If I don't know to listen to it, I wouldn't know. And AI wouldn't know either.
Yeah. It's a great question. Okay, so we're a minute over time. I think we can take one more if anybody else has them. Okay. We got one more. So given the flattening and expected decline in gasoline volumes, what are the most immediate and impactful operational costs that can be reduced by adopting data science-driven solutions? I think it's a great question. So at the very highest of level is it really depends on your operating model. Are you using carriers? Is it carrier managed with a keep full strategy? Do you have your own drivers? Is it a combination of the two? Are you branded fuel or unbranded, or a mix between them? So it really drives down into the operating model. And like, to give an example, so a lot of our customers, or no, I shouldn't say a lot, but some of our customers have carrier managed inventory that's keep full. You can impact the bottom line immediately by going to a demand driven basis outside of parameters. And we have a whole another webinar on that. So with keep full, carriers are going to keep delivering to make sure you have the most fuel in your tank, which means that it's potential that they either have split loads or that they're delivering the minimum quantity and they're not really maximizing your cost as the owner and operator. All right. One more question, just because we are 2 or 3 minutes over time. Have you used your AI in real world tests in order to improve profitability or run out rate? Any results you can share? I would say, and I'll let Adi go into details if she wants to after I talk. So the less than truckload optimization, which can be used for either your meter trucks, tank wagons, bobtails. It can also be used for split loads. There are a lot of customers that have tanks that can't take a full load. You know, they're 3,000, 6,000, maybe less than 10,000 gallons, and so they require split loads. That optimization model has helped one of our customers around overtime, miles driven, total costs, dropping $5 million. And so it's how do you make sure that you have the right number of trucks on the road for the day with the right number of drivers for the least amount of time?
100%, Nick. I was going to say that the simple answer is yes. It's in real world test. The most straightforward answer is that it's saving them at least 2 or 3 hours per day just for the dispatcher. So every dispatcher in any of their regions saves 2 to 3 hours a day in their daily work. And as Nick said, it's also expected to drop overtime by about $5 million a year because we are limiting how long the drivers are out on the road and giving them a far more optimized load and route. So they're achieving the same delivery gallons by using them for a shorter period of time on the road. It's very effective, and like Nick said, we can use the same technology for full truckloads, split loads. It just depends on what is the most important for you to optimize. But yes, it is functional in the real world.
All right. Well, thank you everyone for joining. And if you have any follow-up questions, we have the email address and phone number right there. So have a great rest of your day. Thanks, Adi.
Thank you, Nick.
Bye.
Bye.